Market Technicals morning call video for Tuesday, December the 4th. Interesting day yesterday. We had our morning strength due to China numbers coming out over the weekend, second month of expansion. Markets got a little giddy in the overnight session, so we ended up opening up about 6 handles, and we had a nice gap up, but the gap was not sustainable. Market started to roll over due to our ISM index come out reported at 10 o'clock. Worse than expected, which is not good, especially when the economy is supposed to be chugging along. Markets realized that and started to sell off. Very slow grind lower. So it was quite boring yesterday. I'll run through the numbers real quick. S&P up 0.23, gold down 4, Nasdaq down 2 and a third, and Dow up only 3. So not really what you want to see. And that gap up, if you use that 15-minute rule, which I'll show you in the charts, would have kept you away from getting wrapped up into that gap higher. Now, I would have liked to seen a little bit more of a gap up and and actually hold in that area, maybe another day or two of a big run up and then start to reverse. But that 1424 area, that 1430, like I mentioned the last couple of days, is actually taking effect, and that's actually the 50-day moving average too as well, which capped this market. Markets are overbought in the short term, so it wouldn't surprise me that the markets actually gapped that area and then basically fell out of bed. Again, very, very, very quiet session yesterday. But we'll see. I do think the markets are going to pull back a little bit, and I mentioned that's what I'm looking for. Some sort of a low volume pullback consolidation for another week or so, and then I think the markets will start to ramp up. And that's due to many money managers, hedge funds, basically at even keel, maybe losing money or really not making any money for the year, and that's going to kind of excel them to push them into that black zone, if you will. So we'll see what happens, but that's what I'm looking at right now. It seems to be the case, but we'll see. And that's going to give us a good spot to look to buy into stocks. As you know, the markets are a little bit overbought, but we'll go into it. Let's go look at the econ data. Nothing today. Tomorrow we'll have the MBA index and the ADP unemployment change, but this is the big one here. Non-farm payroll is what I'm looking for Friday. So we'll just keep that in mind. But again, it's going to be all technicals today, of course, anything coming out of the fiscal cliff, and that's something that you got to watch. Take a look at our NIMO. We hit that overbought line right to the penny, and we started to roll back down again. But it's not to a degree where we're overbought, but I'd like to see a big spike up above these areas to really look to start getting short. But we'll see. Who knows? Maybe something comes out today. Markets actually push higher one more time and then sell off. Yesterday's grind lower really didn't do anything for me. It's actually more of a bullish price action than anything. All right, now I want to show you copper, which I didn't show you in the last couple of days. Excuse me. Nice push up, real nice push up. This is what you want to see. So if the markets grind lower and consolidate while copper holds up in this area and above this horizontal trend line, that is what I'm going to be. Let's go. It's a good clue that the markets are going to rally a year. And usually copper does rally prior to the equities market. Let's take a look at some of the indicators too, by the way. Still down here below, so we got plenty of room to run to the downside before any type of big spikes, as you can see here. Okay, and that's the New York Stock Exchange new 52-week low. Then we have the NAYD. Okay, and if you can see here, plenty of room to run to the downside. So the markets right now, putting in that reversal candle, we have a little bit more room. We have plenty of room to the downside before we get even oversold. Okay, so that's a good sign. Now let's take a look at the U.S. dollar. And now the dollar, despite the sell-off, actually started selling off itself too. Again, another bullish development. So with copper rallying, the dollar breaking that key area of support, and probably run down to this trend line here, which would probably come in around 79 and a quarter. That's going to actually put a good bid under the equity markets, especially as we get closer to the holiday season. Now, let's go run into our charts. Just to show you a quick 10-minute. That 15-minute rule I always like to keep in effect, 5, 10, 15. That 1-minute candle, 142.52 is going to be either the line in the sand, that's going to be that low that needs to be held, or you take, if we were just going to the upside, 142.93 needs to break out for new order flow to generate. And sure enough, The latter was the part, 142.50. We broke lower, and then sure enough, we started breaking lower, held, and then once we broke that main pivot of the day, all bets were off. And that's your cue to start looking for some short setups. So if the market is telling us that we have sellers in the market, there's no reason to be buying stocks unless, obviously, it's relative strength to the market in itself. So that 15-minute rule is a great, great rule and always keeps me out of trouble, at least 90% of the time. Let's take a look at the S&P cash. And as you can see here, we're getting in our overbought state in our stochastics, not quite yet in our MACDs. And look at what happened. We're sitting right underneath that 1420, 1424. Markets went as high as 1419 and just really just faded the rest of the day. But again, an inside day to Friday. So no real new price movement. So we're going to see what happens today. It's going to be interesting. We're up small right now in the E-minis, December contract. Now, on the spiders, as you can see, the spiders had an outside day, right? We had two inside days from Thursday and Friday, and Monday we had an outside day, and we actually broke lower. So my guess here that I don't think we're going to get any major sell-off. I think we're going to consolidate maybe another 2 days, 3 days, and it's going to get right into this area. Here's my zone area. It's going to be right in the 200, 139.60, 138.84, right in this area, and I think that makes that higher low from this previous low, and then the markets tend to grind up and then obviously move higher right into the end of the year and the first week or two into January, and then we would reevaluate it. But that's what I'm looking for, a higher low. I do not think that the markets are going to fall out of bed. Obviously, that could happen with this fiscal cliff issue. If it's not resolved, markets can get spooked and obviously sell off. But that's what I'm looking at. If nothing, everything stays in check, I'm looking at a pullback to the 138.68, 139.50, right in that area, and then start to move higher. Now, in the shorter term, here's the S&P 60-minute chart, which I've showed you some positive divergence here and here, and then we had a bullish falling wedge, which we broke out of it. Now, we have negative divergence on our MACD and our RSI, as you can see here, and we have this bearish rising wedge. Now, it's only bearish when we break on a closing basis this lower trend line. So 1408 we need to really keep an eye on. If we do break that on a closing basis, markets usually tend to roll down and then back test the upper trend line one more time before the actual sell-off occurs. So we'll just keep an eye on this. As you see, as of right now, negative divergence as the market's rising. So interesting development. And on the 30-minute chart, as you see, we have an inverted head and shoulders. So we do have markets are in a confusing state, so to speak. So the markets are undecisive on which way it wants to go. We have that inverted head and shoulders on a 30-minute. We have a bearish rising wedge on a 60-minute. I just think that the markets will eventually come down and retest this area right up in here and probably come down to that 139 again. Maybe pull back a little bit, test that neckline, and then start to move higher. Again, as long as it doesn't get lowered in that right shoulder, this could still be a bullish configuration here. Diamonds, same thing. As you can see, outside day, the ETF. So not looking too pretty at the moment. One day doesn't make a trend, so we want to see if yesterday's lows in the indexes are going to hold, and that's going to be the key factor here, yesterday's index. IWM, same thing, held Thursday and Friday's low, which is that gap area, so it's going to be that gap area of support. We'll make that line right there. That's going to be the line in the sand for the next few days, 81.70, call it, and see if it breaks and fills that gap. And again, look at the volume. Very, very low volume yesterday. XLF, same thing, inside day, as you can see. Higher volume than usual, but again, we're coming to our overboard in our stochastics. MACD not quite overboard, but again, guys, as you can see here, you see the theme here. Take a look at Apple. Apple's having a tough time getting above this 604 area, which was Thursday's high, but a well-needed rest on the weekly chart, as you can see here. So let's see if the market, if Apple can muster up a little bit of movement. Remember, it would not surprise me. It would not surprise me if Apple offers a special dividend before the end of the year. If that happens, I would be covering any shorts you have, and I think the market's going to rip into the close. I'm sorry, into the close of the end, in the close of the year. So just a word of caution here. It would not surprise me. Do I think it's going to happen? I have no idea, but this is just the trend that's been happening lately. A lot of these large conglomerates issuing special dividends. And here we go. Apple again on the daily chart, holding in nicely. So we're just consolidating here. So this is not a bad thing. And if I'm long, if you're long, I would hold the long position. I would not be adding to it, nor would I be looking to short Apple here. So we're basically consolidating right underneath the 200 and below the above the 20. Again, consolidating here is a good thing after this big run up. So once we break above this 200, I think it's going to be easily attainable, breaking about the 50, and then at 620, that 620, that 620-ish area, right up in here, that trend line, and then of course that that fib area is going to be a big test to see what happens. That's when I would be lightening up on any longs from down here in this area. And then reevaluate it. But again, let's see if they offer a special dividend. Be interesting to see. Weekly chart, just to show you yesterday, underneath that 20, never broke that 20-week moving average, excuse me. And then, of course, the Qs, last 50-day moving average capped. So basically, a lot of the major indices have been capped by the 50-day moving average. And as you can see here, low volume. So just in recap, I'd like to see yesterday's low and the indexes are going to be key. And of course, yesterday's high, the 50-day moving average, will be key to break above. So yesterday's low or the 50-day moving average on the daily chart is going to be a key pivotal areas for this market to either move lower or to move higher. I do see, as of right now, a move lower, consolidation, and then once that consolidation ends, then I do see the markets rally into the end of the year. But we'll see. But I am looking for a little bit lower prices for now, and that's going to be a great spot to buy into. Guys, have a great day today, and we'll talk to you tomorrow.